All eyes on the Fed. Investor Beat starts now. Thanks for watching. I'm Alison Southwick. It's a quiet day in the markets as everyone holds their breath for the next news out of the Fed. July's minutes will be released later this week, and then it's off to Jackson Hole for the Fed's annual retreat. Joining me now in studio are Matt Koppenheffer and Jason Moser. Gentlemen, our top story. JPMorgan is yet again in the crosshairs of regulators. The SEC announced today that they are investigating the company's practices of offering jobs to the children of high-ranking Chinese officials in exchange for preferential treatment. Now, Matt, it seems like every day we learn of regulators coming out with another lawsuit against one of the big banks, but usually it has to do with the part they played in the mortgage crisis. But this is different.
Yeah. Color me surprised here that a company is hiring well-connected people in order to potentially, this is all alleged at this point, allegedly secure some sort of business. It doesn't seem that surprising anywhere in the world to me, but particularly if you're talking about China, it seems like that may be part of the playing field there.
Right, and it seems like when we talk about China, bribes are just like the cost of doing business. Like, that's how you roll if you're going to be successful in China. So, I mean, can cracking down on bribery really work?
I'm not going to hold my breath. I mean, I really don't think it will. I think that it happens a lot more often than I think we like to admit. I think that ever since the financial crisis, certainly these bigger banks have had targets on their backs. But when you look at JPMorgan, I mean, look, this company has had more than $20 billion in legal settlement expenses since 2009. Okay, that's nothing new. It's something they deal with year in and year out. So I think that investors have to just accept the fact that when you're investing in one of these bigger banks, there is an element of a leap of faith. So personally, I choose not to deal with it. I like looking at the smaller regional banks, things like Ameris Bancorp, for example. And actually, if you look at that stock compared to a JPMorgan over the last 5 years, 2 years, year to date, it actually has outperformed JPMorgan. So for me, they're just a little bit understandable.
Right. So Moser's staying away from the big banks. What's your takeaway here, Matt?
My takeaway is I think investors should not be worried now. They should be thinking about being worried a year from now, 2, 3 years from now. The reaction is what matters here. What is JPMorgan going to do to change the conversation and to tighten things up? And if 5 years from now we're still hearing about the same things, or 3 years from now we're still hearing about the same things, that's a problem.
All right, now it's time to look at some of the day's big movers and shakers. Zillow announced a new acquisition to help cover the New York City market, as well as plans to offer 2.5 million new shares. Matt, granted, it's not fun to see your shares get diluted, but is Zillow making the right moves here?
Oh, it's brilliant. It's perfect. This is an expanding area, real estate services over the web, and so scale is going to be a big piece of it. And Zillow is going for that with this acquisition and the other acquisitions it's made. And with the stock trading at 20 times trailing revenue, we usually talk about stocks trading at 20 times trailing profit. This is revenue. This is an expensive stock, and so issuing stock in order to pay for the acquisition, I think, is a great move.
Barnes & Noble today released apps for iOS, Android, and Roku, giving people on all devices access to Nook Video. Jason, everyone is going to drop Netflix and Amazon Prime, right?
Yeah, what is that Saturday Night Live skit, the weekend update, I guess, where they're like, really? I mean, that's how I felt with this. You know, on the one hand, I mean, yeah, we've been giving Barnes & Noble a really hard time lately. On the other hand, I mean, if they want to have any sort of prayer with the Nook whatsoever, they're going to have to build out an ecosystem to support whatever device. So I certainly commend them on the effort, but I still think that their bread and butter in bookstores, retail, physical, brick and mortar stores is where they really need to put all of their attention. There is a market for that, albeit a lot smaller than maybe what they had hoped. But yeah, this I don't think really will gain any traction. I'd be surprised if it does.
LinkedIn is up after announcing they are dropping their age requirement from 18 to 14. I can't imagine a lot of 14-year-olds are looking to Netflix with other babysitters in the area. What is LinkedIn trying to do here?
Well, the business of LinkedIn and the other social networks is driven in a very large part by the network effects. And so you see Facebook, the more people that are on Facebook, the better, the more appealing Facebook is to other people that want to join. So by getting people on and getting people on early on LinkedIn, it makes the network larger, it makes the network more attractive. And frankly, I think for the younger kids, for these kids in high school, now you've got these university pages where they can check out universities, scout out where they might want to go to school. It's one of the biggest decisions that a high school kid is going to make. And so I think this is a win in both directions.
And finally, Cobalt Energy International took a big hit today after it announced the company didn't strike oil with its Ardens 1 well in the Gulf. So, Jason, is this well really worth that big of a hit they took today?
It actually is. You know, they make the majority of their money from the activity in the Gulf of Mexico, and as we know, the market is very forward-looking. I think the market for a while was looking forward to some profitable activity here, and so we know there's not going to be any profitable activity. They had a 42% working interest in this well, so it's a big hit. And then when you look even further, ever since the end of 2012, they've burned through almost a little bit more than $1 billion in cash and equivalents off their balance sheet, which is concerning as well. I'm sure it's not something that's going to debilitate the company, but the sell-off is warranted.
All right, that covers it for today's movers and shakers. Let's look on to the week ahead. What is one stock on your radar, Matt?
We've already talked about it. It's JPMorgan. The news cycle has been dominated by JPMorgan and regulatory actions, and this is sort of like that drip. It impacts the psychology of investors. It impacts potentially customers. The longer that JPMorgan stays in the headlines with these kind of actions, the worse it is for the company. So I'm going to be watching to see how quickly they can change the conversation.
All right, Jason, how about you?
Yeah, I'm sure Bill Ackman's sitting on pins and needles here for Penney to report tomorrow. And, you know, honestly, I wouldn't expect big things. I mean, by virtually every metric, Penney is just in big trouble. Revenue's down, margins down, same-store sales down, sales per square foot down. I don't even know that the back-to-school bounce is going to really be able to help them out, but I guess we'll find out.
All right. Well, for Jason Moser and Matt Koppenheffer, I'm Alison Southwick. Thanks for watching.